Hello everyone, welcome to the Capital Gains channel. Today I'm going to demonstrate to you a budget strategy, which means a strategy that is suitable for growing small accounts. So the strategy that I'm going to show you works on currency pairs, the GBP USD, GBP JPY, Euro USD, in all other major pairs, as well as crypto pairs as well. It works and also on gold, on volatility 75, even on Nasdaq. It also works. So you can practice it and be sure to use proper risk management. So before I go on to today's video, there was someone who asked, so how can I determine the correct lot size to use on my when trading? So we have derived a formula that you can use to calculate that. That is, we say the amount you are willing to risk divided by 10, divided by the number of pips, the number of stop loss in pips. That is, for example, you are willing to risk a $12 on a trade, on one trade, so it will be 12, and your stop loss will be 30 pips, so it will be $12 divided by 10. 10 is a constant, divided by the number of stop loss, that will be 30 pips. So if you want to risk $12 on a trade, that is 30 pips, that is a 30 pips stop loss, so your lot size will be 0.04. So this is how you can calculate the lot size suitable for your account. Please make sure you use this formula so to prevent blowing accounts. So going on to this strategy, on your chart we have a blue moving average, that is the moving average period 10, and it is exponential and applied to close. Then we also have a moving average, that the one in black, that is a 25 period moving average and also exponential applied to close. And lastly, on moving average, we have a moving average period 10, that is exponential and applied to close again. Then we also have the this one, the relative strength index, popularly known as the RSI, which is an oscillator. So these are the the indicators that we are going to use for our strategy. So what are the rules of this strategy? Whenever you see a black line, the moving average period 25 and 10 crossing over each other, facing down, that will be a sell alert. And when the moving average period 50 crosses all the moving averages facing down again, that will be our buy entry. So to confirm our buy entry, we are going to use the RSI. So whenever the RSI is below, for whenever we want to enter a trade, a sell trade, we should make sure that the RSI is below the 50 level. What does it mean? Which means that the RSI, what it does is it calculates this period 14. It counts the last 14 candlesticks and sees how many bearish and how many bullish are they. So whenever there are many bearish, which means there are many selling candles that represent sellers, it will fall below the 50 period, which means 50 the 50 more than 50% of the candlesticks are bearish. So this is a scenario that you want to look for our sell entries. So like in this case, as you can see, the moving averages are 25 and 10 crossed the year, and then the period 50 crossed the year, so that will be our sell entry. And also you can see that the moving average is below, the RSI is below the period 50. So going back to our formula, you can, to see how much you are going to calculate the lot size that you are going to use, you can just simply go on above these moving averages. Then you can drag your crosshair to this previous high. We use the previous high as our stop loss. So as you can see, this trade was, we were going to risk almost, let's say, 16 pips. So our stop loss was supposed to be 16 pips away. So our take profit, there are two scenarios that you use for our take profit. If you are going to use so the first one is whenever the RSI, we entered here, so when the RSI hits the level 30, that is the oversold zone, which means with the pair that you are trading is now oversold, we then exit our trade, or we can wait until the moving averages are crossed, the 25 and the 10 crossed again. So we encourage our members to trade using the lots the multiples of two lot size, that is 0.02, 0.04, 0.06. Why? Because when one of the take profit criteria is met, we then close half of our positions, then remain with the other half, and then we move our stop loss to our entry point, so that whenever the price moves against us, we will not lose anything, but it will be it will not be a loss to us. And so that's it. So let's go on to another trade setup. So as you can see, the moving average 10 and 25 crossed here, then we wait for the moving average 52 to cross, as you can see. But as you can see, you can enter here, then you can exit here. So that is, we have booked almost 24 pips. So using 0.01 lot size, that will be $2, which is not bad at all, since we said that this is a budget strategy. So as you can see, even if you were to wait until the moving average crossed, they crossed here, and then our entry was here. So this trade we could have booked almost 15 pips, which is a $1.50. We're using the lot size 0.01. So this is not bad at all, considering this is a budget budgeted account. So in this case again, you can see that this one, we usually encourage you to stay away from scenarios like this, whereby the market will be ranging. We don't encourage trading ranging markets. As you can see, the market we failing to go either way, and then it started ranging. As you can see, the market was ranging. So we don't encourage you to trade ranging markets, but rather we want trending markets. So as you can see, in this case again, the moving average, the 25 and the 10 are crossed the year. Then we wait until the this will be our buy alert. So you can, once you see a buy alert, you can start calculating where you are going to place your stop loss, how much you are going to risk, and also so then you wait until it crossed, then it crossed here, and also you check the RSI before you enter. Please make sure you check the RSI before you enter. As you can see, the RSI is below the period 50, so that's a green light. You should enter. We can enter our trade, and then you can see that you can wait until one of the criteria for exiting is met, and you can see that the first criteria, which is for the RSI to reach the period 30, indicated the third period here, and which is somewhere here. So it's almost 40 pips, which is not bad at all. So if you were to wait, close the first half, then the second half you can close it here. Then you wait until you find another entry. Please make sure you don't have to chase the market. Let the setups present themselves to you, so that you can enter. Because if you try to force trades, this is where you find yourself in trade that you don't even know why you enter. So in our video, when we were discussing the reasons why traders fail, why 95% of traders fail, we alluded that some of the traders fail because they don't even have a reason why they entered the trade. So you should have a reason. Like in this case, I'm giving you a setup, so you should have a reason why you enter. So as you can see, that in this case again, the moving average crossed here. That will be our buy alert, but the market started ranging. This is why I said that you should check the RSI to see if it's above or it's below the moving the 50 period, as you can see, the market started ranging. So you should avoid trading ranging markets at all. So after a range markets, after a ranging market, how do you then see that the range is over? As you can see, uh, it range, as you can see, the big candlesticks are signals that a ranging market is over and is now trending. Because a ranging market, there will be an equal fight between the bulls and the bears. So we need the one side to dominate. Like in this case, you will see that the big bullish, the big bearish candlesticks are signaling that the bears have won the fight and is now a bear market. So in this case, you can then enter here. So you enter here, you wait until the first take profit is hit, as you can see, and it was hit here, which is the third. The Now we are looking for the 70 period, which is the oversold zone. That is why on our chart, on our RSI, we have 3 lines: the 70, the overbought, which means you should exit your buy positions; the 50, which is our signal; and then the 30, which is the oversold signal. So in this case, you can exit here, begging 53 pips, which is not bad at all. And if you were to wait again, you could have begged 41 pips. Is again, it is not bad. So this is the strategy, guys. As you can see, it's very easy, and it's very simple. Even if you are a beginner, even grandmothers can you can teach them this strategy and they can start making money. So please do to practice this strategy. And also the other thing is capital gains. Our mission is to provide traders with insightful financial coverage while spreading our beliefs in conservative trading. Therefore, we have a free course that we are offering, a free beginner course, that is the ultimate guide to forex trading, and it's free. You can enroll on our website, that is forextrading.capitalgains.co.zw. I'll leave the links in the description, as well as the brokers that we use and recommend, so that you can also start profiting from the market. Again, in this case, the moving average crossed here, and then the 50 period across all the moving averages here, signaling that we should enter our trade. And the RSI was also below the period 50. So this will be a valid entry. You can enter here and you can exit on our first take profit criteria, which is here, which is somewhere here on these candlesticks. So we'll be targeting 37 pips. So as you can see, guys, this strategy, you can make a lot of money with it. In this again here, this will be our entry. I hope now you have mastered the strategy, you have seen it. So please go and practice this strategy. Use demo accounts to practice it, then you can go on real accounts. But remember, do not trade for a demo account for too long. Why? There are no emotions involved on a demo account. So you should practice on a small real account, so that you can experience and train yourself how to master emotions in such emotions such as greed and fear. So in this case, again, you can enter here. This will be our entry. Then our first take profit will be here, budgeting almost 50 pips. And then the second one, you can exit here, budgeting begging 26 pips. So this is the strategy, guys. As you can see, if you are to follow this strategy, always follow the rules of this strategy, and you make massive pips, massive pips. Like in this case, imagine you would entered here, and then your first take profit would be this long candlesticks, which is about I think 20 or so pips. Let's see how many pips you can get. Yeah, it's 20. Oh, it's actually 30 pips. 30 pips from your first take profit. And then the second one would have been here, almost 50 pips again. So as you can see, guys, this is it. This is the strategy. Thank you very much for watching. I'll see you on our next video. If you are new to the channel, please do subscribe so that you don't miss our future videos. Cheers. Happy trading.